What's up, everyone? It's Karthik with OneInvest. Welcome on board for another Market Open live stream here. S&P 500 flat, QQQ slightly higher. Gold, I think, is hitting another new all-time high, so pushing up almost as much as 26.30 as we discussed. So 26.31 is where it's at the moment, and volatility is also slightly pushing higher as well. So thank you so much for joining. Welcome on board. If you guys can see me, hear me, just give me a thumbs up. Just want to make sure that technically we don't have any issues and we are doing well. So here we go. About 30 minutes left for markets to open. We're in the last trading week of September, and we continue to see markets kind of defy over the last 4 years, especially if you consider when the markets have been down in the first trading week, how much they have recovered. We're back to positive territory in the month of September, which again is a huge signal of the bullishness and the optimism around the rate cut that we witnessed of 50 basis points just last week. So Mike, Kurt, Trader, Michelle, thank you so much for joining. Shout out to all of you guys. And again, let me know if you have any questions. Happy to answer. Tesla having a nice little pre-market rally back up to $254. So we've got, up over 1.6%. So it seems like pre-market we've already absorbed, a lot of that supply, and we're already gapping up very nicely. Nvidia is at 116. So for the most part, very, very flat. And I've got my Nvidia Nvidia calls expiring at 111 on Friday. And if Nvidia continues to trade flat, that is actually very good, because then that contract's going to continue to kind of decay and, expire in the money, but then I'll be able to roll it out to next week once again for a nice little net credit. And that's the whole idea, so that I can move and, keep milking those premiums for as long as I can until Nvidia finally just rockets to, let's say, 130s or 140s, at which point I would not be able to, roll these contracts on a weekly basis. I'll have to go out further in expiration. And then, of course, I have the Tesla buy right that expires on Friday as well. Just really over 250 is what I'm really looking forward to for Tesla, to be honest. 250 on the dot is where it closed yesterday. Right now, 254. In my opinion, I think it has the potential to get up to as much as 270s. Maybe not this week, but, in the coming weeks, because it's got definitely so much of catalyst coming up. So October 2nd, we've got the delivery numbers. The 10th, we've got the robotaxi event, and on the 14th we've got the earnings, right? So October 14th is really when the earning season begins, because Tesla is one of the first companies to report those numbers. So those 14 days are going to be quite interesting for Tesla. I expect a lot of volatility. I'll certainly be trading this both on the long and the short side going into those events, and 270 is going to be that next target that I'm watching for Tesla to take out of, right? Because that's a huge area of supply, as discussed in our Tesla video. So of course I won't be rolling these contracts anymore. The nice premium with the capital gain, I'm happy with that. Just needs to finish up of 250 by Friday, and we're gonna start again. On next week here, fresh in the first week of October, as well for a lot of these companies. Okay, so should I add a position to Palantir this week, Barry? We can take a look at that. Sai is asking, is it a bull signal or should we wait? So what specifically, is that in context to like specific stock, or just the market you're asking for a potential bull signal or waiting? Also where's the cash liquidity level that you're currently at? More context is really going to help me guide you better, in your investing and trading journey. Because at the end of the day, as I've said before, no two portfolios are ever going to be the same. Everyone's going to be investing and trading with a different financial objective, different goals, different tax jurisdictions, different liquidity, different time horizon. Everything's going to be different, right, for every single person. So answering your questions, I need more context, and the more I have, the more precise that analysis, that guidance is going to be. Okay, Jun says, you're the most reliable market analyst out there, so thank you so much. I appreciate that very much. And, we talked about this in our yesterday's market update as well, that, I will never make a prediction on the market. I will never tell you, what the markets are going to do, higher or lower. It's really just understanding the risk reward and trading and investing based on what we know today in the present, and not trying to make predictions of what is going to happen in the future, because nobody's going to be able to do that consistently, over the long period of time. Nobody's going to be right about that over the long period of time. So Mike, what is the practical difference trading a buy right versus just buying 100 shares and then starting with the covered calls? Well, not really much of a difference. It just depends on where you are comfortable letting go of your shares. Buy right is more specifically focused on the premiums because that's why it's called like you're buying and then writing calls at the same time. Versus if you are simply just buying shares and then if there's a huge time lag and you're also looking for capital gains, then you're just different strategy with the same purpose really is to make profit at the end of the day. So there's not really much of a logistical difference because you're doing the same two actions, buying shares and selling calls at the same time. It just depends on what your strategy is, how long, and what strike prices, what expirations, all those different things. With Tesla's buy right from yesterday, I bought the shares at 248.40, right around those prices, as Tesla was trading down, intraday, and then I ended up selling my call. Now, ideally, could have waited until the last minute because Tesla had already recovered back up to 250, and I was kind of like in my gut feeling, I was like, okay, Tesla's had a very nice uptrend intraday. It was making higher highs and higher lows, and usually when that happens, it's very likely that most of these stocks kind of finish higher towards the close because that's the overall trend, and volume comes back in towards the last hour of the day, and that's what makes the stock price pretty much trade at near high of day towards close. So had I sold that call at pretty much the last 5 minutes, I would have gotten a lot more premium for that option, and would have also potentially would have unlocked a strike of closer to 251 as opposed to 250. But if I were selling a 250 call, that would have been very much at the money, and I can bet those premiums would have been well in the $7 to $8 range for this Friday. But obviously I needed a hedge to protect that downside because Tesla was dropping in the first place, so I needed that hedge in place so that even if Tesla drops, I am able to capitalize on that call. So sold it I think 15 minutes or 10 to 15 minutes after I had bought the shares. Okay, let's take a look here. So, okay, bull signal, or should we wait from a market perspective, market in general, to go all in after the Fed cut? So, when it comes to going all in, are you talking about like going 100% into stocks and then zero into cash or anything else? Because, we have a liquidity framework that we have created for everyone to follow, and it's going to really help everyone, from a, hold on, let me just pull it up. It's going to help everyone in their understanding of where they should be or where they want to be, because the level of cash that you have in your portfolio is going to be somewhat directly correlated with how comfortable you are in the market. If you've got a ton of cash sitting on the sidelines, then you're going to be feeling a lot better, meaning that there's not going to be a lot of volatility. And then at the same time, you may feel that you're underinvested and missing out on the opportunity as well. So you really have to find that right balance between feeling FOMO while also feeling stressed, invested in the market, right? So you have to find that balance. And that is something that you can only sort of figure out yourself. It's a self-evaluation. If you've got $100 to your name and you've put in all $100 into the market, how do you feel, right? Do you feel stressed out? Do you feel like, oh, that $100 could be $80 a few weeks from now, or that could be $120? Like, how do you actually feel, just having that $100 in the market is what's going to tell you where your sweet spot is. So, we did a very interesting survey in our MoneyVest members, in our Discord, in our community, asking people what is their risk tolerance in the market, right? How risk prone are they in investing in the markets? And majority of people said 7 out of 10. So 7 out of 10 is kind of like what I also am. Like I'm about 6 or 7 out of 10. 10 would be like super risk aggressive, taking on all the risk with no regards to volatility. Just, there's no, I don't mind taking a lot of volatility. And again, 1 or 2 meaning that, you're very, very risk averse. You don't want to take on any risk at all. So, where you feel comfortable is what's going to determine where your cash level is going to be. So this is, again, going to be more geared towards your personal finances, months of expenses saved up in liquid cash. And this is going to be the percentage of cash in your portfolio. So if you're going to be all in, for me, that can be a very distressed position to be in, or a little bit of a vulnerable position to be in, because then I have no money to dollar cost average if the markets were to give me any opportunity. If they were to be dropping 5-10%, I don't have anything to buy with, right? So I have nothing to deploy cash and buy some of the higher quality companies at like discounted prices. But I also don't want to be, over 50% in cash. Then I'm going to be very underinvested in the market, and I'm really just going to be sitting on the sidelines while the markets keep hitting new all-time highs, as we've seen, more recently. So for me, a more sort of appropriate level is somewhere between defensive and prepared. I fluctuate between 10 and 30%, more like a cautious and prepared, so somewhere between 5 and 30%. So for example, right now I'm at 20%, so you can say that I'm defensive right now. And that would also be like the overall market's positioning as well, as utilities lead, gold is pushing to new all-time highs, and technology is pushing up, but it's not the leading sector. It's not the one that's actually dominating, this market higher. So this is also kind of like a market's positioning, which is defensive. And that's where I'm at. And, if the markets keep pushing up and we continue to see all-time highs and get to very exuberant levels where valuations are very rich and we're trading at overbought conditions, I may drop down to like somewhere between, 20 and 30%. In other words, raising my cash exposure and becoming even more careful. But I would be somewhere between cautious and prepared. So I think everyone has to kind of go through this exercise to better understand, okay, where do they personally feel comfortable with how much cash they have on the sidelines. And if you feel like, you're missing out on opportunities and you've got too much cash, that's fine. Invest, right? There's nothing wrong with deploying money into the market. And take a look at our 37 stocks and ETFs watch list, where you can have a nice sense of what high quality companies we're watching as a community. We've also got price targets. We got fair values, no-brainer buy targets, everything laid out perfectly in a nice table. And then you can wait and see, okay, if the prices come down to that level, I can deploy money into those stocks. Or when it comes to individual ETFs and indexes, there's no timing measure that you can look at. You can continue to dollar cost average on a weekly or a monthly basis. Really depends on what frequency and what amount you're comfortable with. So that would be kind of like a long answer. So is curious, is Amazon a buy? Well, Amazon has been a buy for me for a long time. Again, it's been part of our watch list and shopping list for a very long time. I've mentioned this before, that I think Amazon's advertising business is still very underappreciated. With the ad revenue coming in very strong, now surpassing YouTube, and Mark Mahaney putting a new target. I think 240 is their new target that I covered in my yesterday's market update on Amazon, as well as the ad business now ramping up with their Prime Video as well, is going to really just catapult the company to higher earnings potential, and it's just now becoming more and more profitable. So for me, Amazon is a long-term just buy and hold business as of this moment. Of course, we'll continue to evaluate the story and the numbers as time goes on. Why are investors turning away from Lululemon when they have great sales expansion outside of the US, great demand, and only one failed product? Just one. Is it the competition from Alo? So yes, a couple people asked about Lululemon. Can you review Lululemon? So we've done a full analysis on this company before. And right now, it's in the doghouse to say, that it's not really going to move much until we get earnings that show very strong consumer demand. And Lululemon, again, it comes under a very discretionary product, right? I mean, you would agree that Lululemon products are slightly more expensive than what you can find as alternatives in the market, right? Because of their quality, because of their brand, they're able to charge a higher price. And that's why it is a discretionary spend. At the end of the day, it is a stock that is dependent on the economy booming, people doing well. And when you've got consumer savings rate coming down to under 3% and consumers really struggling with the higher cost of living, and especially if you consider the lower third of consumers making under $40,000 per year, they're the ones that are going off first, and that's going to create a ripple effect. It's really companies like these that actually face these challenges in a economy that is struggling, because it's a discretionary stock. And that's what we've learned about, from a demand standpoint. It's still strong, no doubt. I mean, numbers are still showing good growth, revenues, earnings. But in the short term, I think there's going to be some challenges for Lululemon. And of course, you had the failed product. You had the chief product officer that also quit for Lululemon. I remember talking about it in another video. But 205 is going to be the next support to watch. And right now we're literally at a resistance somewhere between 250s and 280s. That's where we were previously getting validated as a support. And right now we're struggling to break out above this level. So give it time. I think as the consumer demand sort of shift over time, and we continue to hear more about the company's earnings in the future quarterly numbers, then I think there's potential for that recovery back up. Lana, I don't know, Caddy, I kind of disagree. People who shop at these kind of places aren't really looking at prices, to be honest. I don't know about that. Like now you'd be surprised to learn that Walmart just issued a report that said that even the richest people, even the people that are in the top third of the earnings for their households, are now shopping at Walmart. They're now actually moving more towards Walmart to actually shop. So they're becoming more and more price conscious as well. So they're going to definitely be moving away from those discretionary spending if the cost of living continues to be elevated and it continues to go up. Cost of borrowing has been so high for such a long time, and it's finally starting to come down. As we know that, home affordability has been through the charts. In fact, I was looking at a few other charts that were suggesting for it's the highest it's ever been since the 07-08 bubble, might even be higher on some measures on inflation adjusted prices, and relative to incomes as well. So, you've got a situation where prices overall for assets and for consumer goods is at an all-time high, right? So even the top third of people that are they're well off, they're making a lot of money, they're also starting to become very price conscious going to Walmart. Walmart is the one that actually issued that report in the first place. That just goes to show that, okay, we're starting to see that it's not just the bottom third or the middle class, it's also the top third that are becoming very price conscious. And if they're the ones shopping at Lululemon, I mean, sure, they don't think about prices much, but at the same time, they don't have any other choice, right? But to actually cut back on some of that spending. When the more important thing are the necessities that they have to focus on. So again, the numbers will eventually, tell us what that looks like over the next few quarters. But I do still see potential in Lululemon. It's too difficult of a name to pronounce consistently. Lululemon, difficult. Next few months, but we'll continue to keep in mind where the earnings actually end up. Yeah, big sell, same brand stuff, but at the same time, again, it is considered as a low cost option for a lot of people. So what instrument ETF do you recommend for those who cannot buy physical gold? Nomad here without a home. Rini, that's interesting. I mean, I'm more interested in to learn about your life and how you're living as a nomad, where you're living and what your lifestyle looks like. Are you traveling a lot? Like, are you just pretty much in a new country every few months? Because I've tried that myself, but of course I've got to carry a lot of equipment, microphone and lights and whatnot to record my videos. But I've always been interested in just being a nomad and traveling and then just recording videos and trading and doing all of that from different places. But when it comes to gold, I would say that there is GLD. That's the Spider Gold Trust. It's very correlated to where gold prices are. So you can see that, it's also ripped from its lows of back in October 22 from 150 to now over 240. That's up over 61%. Absolutely incredible. So Istanbul now, happy to chat about nomading, doing it for 1.5 years now. Actually, I was planning to go to Turkey. I got my Turkey visa. I was planning on going there right after I came back from Georgia, but I was like, okay, let me settle in, get back, with the work here. But October 16, November 15, I'm kind of blocked out because there's so much happening with earnings and elections and the Fed meeting and everything. Then I'm like, okay, I can travel before that or after. So I've got to also keep in mind all of those, but that's incredible. That's amazing. Istanbul, I'm sure, is very beautiful. It's definitely on my travel list to go and visit. But yeah, so GLD is one of the ETFs, Spider ETFs that you can consider. Same price action. It follows really well. Its volume's pretty good. 5.46 million shares traded. Okay. Now a question about an individual thoughts on a quantum computer designer IQNQ, one I've been watching for several years and even made a little bit of money on it. So let's take a quick look before markets open here. IQNQ. What's the ticker symbol on that, Mike? Because it's not loading up here. Doesn't seem to match any symbols. Tesla. Palantir. Let's take a quick look on Palantir. How is it doing? $38. It hit $38 yesterday. My price target's still going to be close to $40. In other words, I expect or I can see Palantir getting up to $40 by the end of this year. And the $44.97, of course, $45 is going to be that all-time high. If Palantir, I think, takes out that all-time high, things are going to get crazy, I think, on Twitter, on YouTube, everywhere, because as we know that Palantir is a very retail-driven stock. An institution only just recently started getting into it after they became profitable. So I'm sure at $44, $45 at new all-time highs, Palantir is going to be the hottest thing on the internet, considering it's got so much retail support. So $40 is first. I think that's a level that is easily achievable in the next 3 months or so. And then we'll worry about 44.97. But yes, it is incredibly overbought right now. RSI 74, even on the monthly time frame. I think RSI 73. In fact, it's been the highest level ever since the inception of the stock here. And like I said, that's going to be that target to keep in mind. Just got to be careful for any type of weakness or pullbacks that are possible for Palantir, because that's how stocks and markets move. They go up and they come down. They go up again. They come down again, and that's just the nature and the cycle of these individual stocks and index and ETFs as well. Someone who is willing to spend $100 on yoga fans, they don't care, to be honest. I don't know. I mean, maybe now they're starting to care a little bit more. 16% up in pre-market because China's cutting rates by 50 basis points. Yes, so a lot of Chinese stocks are up significantly because China decided to put in a lot of quantitative easing. 50 basis points is what they ended up cutting rates by. Alibaba is up over 6%, so back up to over $95. So very, very nice move to the upside. NIO is also up over 7.8%, so a little bit under $6 at the moment. And let's take a few other stocks here in the Chinese sector. I don't have any positions in Chinese stocks anymore. I used to have a position in NIO, but then I sold it because it was just the capital, locked up in NIO was just better off in other companies. So yeah, Baba up 6.2%. Baidu is up 5.4%. It's been trading right about that area of demand and support here for a long time at $80, $81. We got PDD up over 5.3%. Li Auto's up over 8.9%. We've got, let's see, Hang Seng Index closed up 4%. So very nice move to the upside here. JD.com is up over 8.5%. So very nice move after the cut in China by 50 basis points. Let's take a look at Nike. So Nike with the new CEO, quite an interesting story, right? I mean, working as an intern at Nike in 1980s, and then working your way up to becoming the CEO, just absolutely incredible. And it's really just stories like these that kind of motivate you, that in showing you what is possible. So, and again, Nvidia's story is even more crazy, as Jensen Huang working as a busboy, washing dishes and kind of serving people at Denny's, and then 31 years later, he is one of the richest people in the world, starting Nvidia, and then of course growing it to where it is now, multiple $1 trillion, is just incredible. And it all takes time. I think it all takes time. It's patience, and it takes a lot of discipline. It takes a lot of consistency. A lot of people look at that success and think like, oh, that was overnight. That just happened in a matter of a few months. No, I mean, these people, they were doing it for many, many years, consistently over time, putting in the time every single day. And now, of course, it seems like it's overnight, but it's taken them many, many decades. So Nike, I've always loved Nike as a brand. Really, when it comes to sports brand apparels, clothing, Nike is kind of like my go-to option, even for sneakers and stuff. And from a valuation perspective, it's now come down to pretty attractive levels. It's always been a phenomenal sort of company from a revenue growth, from a profitability standpoint. Balance sheet has been pretty solid. And we've also got good share buybacks, I believe, every single year. So if you take a look, so we've come down from 1.27 down to 1.2 billion. And I think it's paid a little bit of a dividend as well, if I'm not mistaken. So dividend, yes, so 1.7%, right? So just under 2% in dividend for Nike. So, it's at a support here that's going to be in the low 80s. And target's going to stay put all the way up to $130. That's a bit more optimistic over the longer term, I would say. And we've got a little bit of a gap to also fill for Nike. So where we are right now is a nice little oversold condition for Nike. And support level is going to stay put at $80 for this stock, and a near-term resistance all the way up to as much as here at 97.50. You can also pretty much figure out the fair value using the MoneyVest platform if you wanted to. Let's see what the MoneyVest score or the M score is for Nike right now. 3.77. So it actually scores really well on the M score. Makes sense why it would do that, because valuations come down. We're trading at under 20 times free cash flow, a little bit over 17 times operating cash flow, a little bit under 23 times earnings, and 2.5 times sales. And the growth rate has been pretty strong with consistent share buybacks, as I pointed out earlier, for the company. And then if you take a look at the earnings expectations for Nike here, so if you take a look here, expected to contract a little bit and then accelerating back up to almost 421 by 2027. Okay. Amex has a great offer on membership points transfer. Check it out. Yeah, I'm looking at a few different credit cards. I definitely need a new one. I've had just the two. I've honestly only really had one credit card for like over 10 years. And then I had a brand new one just 1 year ago when I moved to Dubai. But now I'm looking for a more travel-oriented card where I can sort of get a lot of points and then redeem them for miles. I really wish Emirates had a specific Emirates offered credit card, because I love that airline, and that's really what I take from here. But yes, I'll take a look at that American Express as well. Yes, elections are critical for SoFi. Visa, it's been coming down a little bit from those resistance levels. So as we've discussed, Visa was very overbought and overextended for a very long time. So starting to roll over, down over 2% actually, pre-market. So quite an interesting drop here for Visa. So Tesla up 1%. Visa declined 2.2% after the U.S. Reports. U.S. Department of Justice Antitrust Division could file a lawsuit as soon as Tuesday, accusing the payment giant of illegally monopolizing the U.S. debit card market. Does the DOJ not have anything else to do other than just go after some of the biggest companies in the world for just like these bogus claims? Like, it's not like other companies don't have the potential to grow. It's just that Visa is like the bedrock for the entire credit card, debit card processing market. It's just insane. Yeah, ENBD has Emirates Skywards credit card. That's the one that I was looking at as well the other day. I may actually opt for that one, but I also want to get the best deal in terms of what points and the sign up offers and everything. What's going to be the best? But I also need something that's more international, because I can use it anywhere in the world without a lot of sort of fees and everything else. But yeah, I mean, Visa coming in with a potential lawsuit similar to Google, down over 2.4%. So selling off here. Next support is going to be down to $272, down to $266 for Visa there. Amex, great customer service as well. Chase Revert, Capital One Venture, Amex Platinum are no-brainer. Thanks, guys. Thank you so much for all those recommendations. I really appreciate that. I'll save this chat and come back to it. Revolut, I've heard good things about Revolut. I think they're mostly popular in the UK, if I'm not mistaken, and then pretty much gets applied to other countries as well. Any high-yield savings bank you can recommend? Depends where you're located. I think in the US, Ally Savings or a lot of credit unions will give you a lot of sort of higher interest rates on your savings. But again, interest rates are also coming down. So the expectations could be that rates obviously get lowered. One more thing I wanted to mention from a personal finance standpoint, one of my old friends, they just texted me yesterday. Essentially, what happened was that their JP Morgan Chase bank called them up to say that rates have been lowered, and now you can lower your interest rate on your mortgage from 6.5% to 5.77%. And if you do that, you're going to be spending about $3,000 in refinancing and closing cost, but it's going to save you $500 worth of interest per month. And so they were asking me like if it's worth doing that because their bank called them up and said rates have been lowered and you can save interest on your mortgage now by $500. That sounds like a great deal. But I essentially mentioned to them to just hold off right now because we know that rates are, at least they're indicated to be lower moving forward. So you may, if you have a mortgage in the US, you may have calls from banks, kind of encouraging you to refinance as rates have come down because of the, closing cost and the fees that they generate. But, if you do the math here, $3,000, if it was what you end up paying up front, right, to save $500 of interest per month. So 3,000 divided by 500, that's 6 months. So you don't really see the benefit of refinancing until month 7, right? Month 7 is when you actually start to see the benefit of that refinance, right? That you're saving $500 of interest. But in 7 months, we know that markets are already indicating for another 50 basis points to as much as 75 basis points worth of cuts. So if that were the case, by December, it's possible that, we could see even lower rates by another 25, 50 basis points. So if you're just a little bit more patient, you can allow for rates, for mortgage rates to come down further and then refinance once we are, sub 5.5 or sub closer to low 5s or maybe even in the 4s for mortgage rates. You do it once, you do it the right way. Obviously, nobody has any idea of where rates are going to be, let's say a year from now. But at least that's what the markets are expecting, that they're going to come down. They're going to keep coming down. At least 25, 50 is what the market and the Fed in themselves have indicated for end of 2024. So I essentially told them, like, if you refinance now, they're going to call you again in 3 months and be like, okay, rates are lower even further. Refinance again, spend another $3,000. It's lower interest rates. So it's just better off just wait until December, see where we are with interest rates. And you can always, refinance at that point. So yeah, you can also explore many other third-party vendors providing lower interest rates without any closing costs as well. So that would also be if you're switching over to a different provider, then yes, it's going to be even better. So if I buy T-bill 6 months with a 4.5 or 5% yield, I will make 9 to 10% per year. Then why would investors buy 10-year treasuries? So that's an annualized rate of return. It's not on a 6-month basis. It is the actual yield that you will have on an annualized, on a 1-year basis. So whatever is quoted on the treasuries is going to be quoted on an annualized basis. So no, you can't just buy 6 months T-bills, make 5% and then buy them again for another 5%. It's annualized. So you're going to be making half of that since it's a 6-month bond, right? Same thing with, 1 year, 2 year, 3 year, 5 year, 10 year, 30 year, whatever's quoted is an annualized number. So mortgage companies in the last few days have been ringing off the hook. I can imagine. So anyway, going back over to the market. So we've got Tesla just a little bit under 254, Nvidia just over 116.4 here. QQQs are up over 31 basis points, and S&P 500 is up over 18 basis points. We don't have a lot of data, but we do have a lot of members talking this week. So we've got Michelle Baumann, Michael Barr, we got Lisa Cook, John Williams, Jerome Powell is speaking on Thursday. We got Susan Collins. We've got Michelle Baumann again. And we got the personal consumption expenditure, the PCE numbers, as well as the retail inventories, consumer sentiment, GDP numbers, jobless claims, a lot of those data points scheduled for later this week, so on Thursday and Friday. So, wondering what kind of impact Middle East conflict would have on the market. So, yes, I think for the most part, it's Israel, Lebanon. They definitely had a pretty disturbing, airstrike. I was reading about it the other day, and very, very unfortunate. It's just so difficult for people to maintain peace in the world. It's just, sometimes I wonder, what people in power are really, really trying to do. It's insane. Why can't we just live in peace? Why there's so much conflict over resources and power and all those different things. But yes, I think if it starts to accelerate, then there could be some problems, especially that, Israel has had the backing of the United States for a really long time. But we'll see how that progresses. I'm no expert in geopolitical affairs, let alone talking about different crises in different countries. But you can better believe it that it's gonna benefit some parts of the market, which is like the defense sector. Lockheed Martin, Raytheon Technologies, those sectors, those stocks tend to do much better during times of war. And then also, if things were to accelerate or get worse, then oil prices most likely shoot up during those times because there's a lack of supply. Then that affects inflation, which affects interest rates and monetary policy moving forward as well. Anyway, so markets are open now. We got Nvidia just back up to over 117. Tesla a little bit over 253 right now, so just up over 1.4%. We'll see if those gains get hold up or if he starts selling back down. S&P 500 is flat, and we've got the Nasdaq up over almost 30 basis points right now as well. Visa opening down quite aggressively, down over 3% now. So selling all the way down. 272 is going to be that next support level. Resistance is going to stay put right about there. $282 for Visa. Volatility is just over 15.8. Yeah, Lockheed moved up 25% in 3 months. There's a few companies that we talked about, very briefly. Technoglass is one of them. I don't know how many of you guys remember this, but Technoglass has had just an insane run up. It just kind of flew under the radar. I remember talking about this stock long time ago. It's like a very boring company that provides glass to a lot of commercial, residential developers and projects, and up 147% from those lows of $28 from back in November of 23. So in just under a year, stock's up like 150%. So it's done really well. And then ACLS, I think, was another one that we were talking, but still hasn't performed well. It actually did move higher from 92 to as much as $150. So that was a nice little 68% gain, but we've sold off back down. And this is going to be that support level once again for ACLS. So that's going to be that area of demand and that support to watch. Okay, going back over to the markets. Tesla hovering around 253, 252. There's definitely going to be a lot of volatility here for Tesla, so we'll continue to monitor how it trades. My call strike's at 250, so it's already in the money. So that's good. And Nvidia here, 116, 117 right now. My call strike is 111. They're both in the money right now. So if I do nothing and if they expire where they are at the moment, all my shares are going to get called away, and I will end up with a nice little capital gain as well as the premiums that I keep from selling those options in the first place. So Srinivas, good day, Caddy. How are you doing? Is Tesla going to hit 350 before Robotaxi event? What is your thoughts? So how many people here think that Tesla is hitting 350 before the Robotaxi event? Or let's see how many people here believe that Tesla is going to get to $300 before Robotaxi event. So let's see. Tesla price target by 1010. We're only making a prediction. Just throw your best guess out by Robotaxi. So we're going to put 350, 300s. We're going to put 275s or 250s. So I'm going to start this poll. So I'm going to put above 350, between 300 and 350. Then we'll put 275 to 300. And then we'll put 225 to 275. Let's see. Let's see what everyone is expecting from Tesla here. $270, $275, Tesla, please. It's been wiping my account for the past year. Yeah, it's definitely been struggling a lot, right? It's been back and forth quite a few times, giving us a lot of reason to be very crazy in terms of the volatility. But I think the breakout is now starting to play out a little bit better than what we've seen before, because it was on the monthly time frame, as you'll notice. It was consolidating sideways for the longest time. And really the level that it needs to take out of is going to be 270, 275. If it can take out somewhere between 275 and $300, so this level that we have pointed out, the red rectangle, then I think the potential is very high for us to, see 350s and 400s for the foreseeable future. But those are the resistances, right? That's the level that it needs to take out in order for us to see those higher levels, because it's been getting rejected here in the 300s for a really long time. In fact, the last time we were trading above 315 was back in April of 22. So it's been well over 2 years since Tesla has traded above 315. So to expect Tesla at 350 by Robotaxi, which is like 2 weeks away, is very, very bullish. It's very optimistic. So it's not like in my opinion, it's not gonna happen. Well, never say never. It's possible, but the probability is very low. I mean, 350 is like a 40% rip from where we are now in a very short period of time. So unlikely, but 275 is possible. But that's also the level that I feel like it's gonna get rejected a little bit. Sylvia says 200 is more possible than 300. Anything is possible at this point for Tesla, for Nvidia, for a lot of these companies. I mean, they're just so volatile. That's why I think it's more important to trade them right now, considering how much volatility there is. The premiums are so lucrative than to invest and buy and hold, because Tesla for buy and hold investors over the last 3 years have not done anything. It's really just been trading sideways. And so while buy and hold is good, you also need to be able to make money while the stock doesn't do anything. And that's where options comes in. So we've got 40% 275 to 300 and 41% 225 to 275. So we've got 81% of people expect that Tesla is going to be somewhere between 225 and 300 by Robotaxi. So if it rips above 300 or if it drops below 225, then that's the 20% outcome that investors are expecting. But yeah, it's a pretty split vote between 225, 275, and then 275 and 300. Okay, everyone. So that's going to be it for today. I'm going to jump into our Discord, trade for a little bit, see what options are available. Still have a little bit of buying power. Maybe I can sell some puts on SoFi or Palantir. So we'll decide on that. So thank you so much for joining, everyone. Really appreciate you all. And make sure that you drop a like, subscribe to the channel if you haven't already. And again, there's going to be a link down below if you want to join, be a part of our Discord and our Patreon as well. So thank you so much. See you all in